As of this exact moment, Datavault AI Inc., trading under the ticker DVLT on the NASDAQ, is hovering at $1.53, showing a significant intraday contraction of approximately 8.2% amid a broader flurry of microcap volatility. If you are watching the order book right now, you are seeing a classic tug-of-war between speculative retail bid support and a wave of profit-taking that has pushed the stock down from its recent highs near $1.86. The immediate market movement suggests a reaction to recent insider filing disclosures, specifically the selling activity by a director, which often spooks the momentum traders who live and die by the minute-by-minute charts. When most investors hear the name Datavault AI, especially those scanning the top movers list on their Robinhood app or filtering for high-beta tech plays on a Fidelity trading platform, the expectation is often binary. Either this is the next NVIDIA stock in its embryonic stage, waiting to explode as it monetizes the world's data, or it is another vaporware rebranding exercise capitalizing on the artificial intelligence hype cycle. The narrative expectation is that a stock trading under $2 is a lottery ticket, pure gambling with no fundamental floor. However, the reality of Datavault AI requires a much more sophisticated lens than simply dismissing it as a penny stock. The reality is that while the price action screams speculation, the underlying business shift, moving from legacy semiconductor architecture into the high-stakes arena of data valuation and monetization, presents a structural transformation that is rare to see executed this aggressively in the microcap space. You are not just looking at a stock chart, you are looking at a company attempting to pivot its entire identity in real time, leveraging partnerships with heavyweights like IBM to validate a business model that claims it can turn raw data into a tangible, tradable asset class. Let's analyze the immediate price action we are seeing on the tape today. The stock opened at $1.54, briefly tested liquidity lower, and has been struggling to reclaim the volume-weighted average price, VWAP, throughout the session. This weakness is not isolated. It correlates with a broader risk-off sentiment in the speculative tech sector today, where liquidity is drying up for companies that are pre-profit or in early growth stages. Unlike the massive ocean liner stability you get when holding Apple stock or the fortress balance sheet of a Microsoft, DVLT trades like a speedboat in a hurricane. The beta here is incredibly high, meaning that for every 1% move in the NASDAQ, Datavault AI might move 3 or 4% in either direction. For a trader using interactive brokers trading platforms, this volatility is the primary product. It offers the kind of intraday swings that allow for rapid scalping strategies. But for a long-term investor looking at a Schwab Intelligent portfolio, this kind of chart looks terrifying. The recent selling pressure we are seeing today is exacerbated by the filing regarding David Howitt, a director at the company, disposing over 19,000 shares. While the total value of that sale, around $32,000, is a drop in the bucket compared to the insider selling you see at major conglomerates, in the fragile ecosystem of a microcap stock, any insider exit is often interpreted by retail algorithms as a signal to dump, creating the self-fulfilling downward pressure we are witnessing right now. To understand why this stock attracts such fierce debate on forums and investment help sites, we have to pass the red candle forming on the daily chart and analyze the volume. Today's volume is trending significantly above the 30-day average, indicating that despite the price drop, there is a massive amount of churn. Shares are changing hands rapidly. This often happens when a stock is at an inflection point. The bulls are arguing that the recent revenue growth, a staggering 148% year-over-year increase to $2.9 million reported in the third quarter, justifies a much higher valuation, potentially retesting the $3 or $4 levels we saw earlier in the 52-week range. The bears, conversely, are pointing to the cash burn and the history of the company, formerly Summit Semiconductor, and arguing that the pivot to AI is a show-me story that hasn't fully proven its scalability yet. When you compare this to the trajectory of a company like SoFi Invest, which had to fight tooth and nail to prove its fintech model worked against traditional banking, Datavault is in an even earlier, more precarious proof-of-concept phase. The market is effectively asking, is this company building a supercomputer and a data exchange that will matter in 2026, or are they just issuing press releases? This brings us to the core of the investment thesis: data monetization. In the current digital economy, we constantly hear about how data is the new oil, but very few companies have successfully created a marketplace where that oil can be refined and sold by the originators. Datavault AI claims to be solving this by using blockchain and AI to secure and value data. If you are using a Fidelity mobile app to manage your retirement, you are likely invested in funds that hold Google or Meta, companies that hoard data. Datavault's pitch is different. They want to democratize that value. This is a massive claim, and it's why the partnership with IBM is the single most critical fundamental anchor for the bulls. IBM has committed resources, solution architects, and AI engineers to help Datavault build out this vision. When a blue-chip giant like IBM associates its brand and labor force with a sub-$2 stock, it forces institutional algorithms, the kind running on high-frequency desks at Interactive Brokers, to pay attention. It validates the technology in a way that a standalone press release never could. But navigating the execution risk here is not for the faint of heart. If you are sitting there with a Fidelity brokerage account thinking about allocating capital, you have to ask yourself about dilution. Microcap companies often fund their growth by issuing new shares, which dilutes existing shareholders. We saw this with the recent $150 million strategic transaction involving Skylex Holding Company. While this deal brings in capital and strengthens the balance sheet, the complexity of these financial instruments can often weigh on the stock price in the short term, acting as a ceiling until the market fully digests the terms. This is a classic investment help scenario where reading the fine print of SEC filings is more important than reading the headlines. Unlike investing in Tesla stock, where the primary driver is vehicle deliveries and Elon Musk's public persona, investing in DVLT is an exercise in forensic accounting and analyzing capital structure. You have to watch the share count like a hawk. Comment below how many shares of Datavault AI you currently hold, or if you are waiting for a dip below $1.50 to start a starter position. I want to know if you are playing the momentum or the long-term data thesis. Let's broaden the scope to where DVLT fits in the current sector rotation. We are seeing a market environment where money is moving out of safe stagnation and hunting for growth, but it is selective. The semiconductor sector has been the leader, driven by NVIDIA stock and the insatiable demand for GPUs. Datavault AI is trying to draft behind this momentum by positioning itself not just as software, but as a computing play, building a supercomputer for data processing. This is a capital-intensive goal. It places them in competition, obliquely, with massive infrastructure players, yet they are valued at a tiny fraction of a % of those competitors. This asymmetry is what attracts the Robinhood crypto and stock trading crowd. The potential upside of a $1.50 stock going to $15 is a 10x return, a 10-bagger that every retail investor dreams of. But the risk of it going to 50 cents is equally potent. It requires the same kind of iron stomach that early crypto investors needed. Speaking of crypto, Datavault's use of blockchain technology for data provenance links it to the broader Web3 narrative, which adds another layer of volatility. If Bitcoin or Ethereum rally, you will often see sympathetic movement in stocks like DVLT, regardless of the company's specific news flow that day. We must also consider the retail versus institutional dynamic playing out here. On platforms like SoFi Invest or Robinhood, the sentiment around DVLT is often driven by social media amplification and excitement over keywords like supercomputer and IBM. However, when you look at the institutional flows via Fidelity Wealth Management or darker pools of liquidity, the accumulation is more cautious.